Hello everyone, Maurice here. Welcome to Tanks Invest, where we're going to talk about investing, finance, and professional development. For today's video is for entertainment purposes only. The stock that we're going to talk about today would be Airbnb. So I've been observing Airbnb for quite some time now, ever since its IPO early in December last year, and ever since then it sold off because of a lot of insiders selling, and then subsequently rally up because of people's expectations that the economy was coming back up, knowing the fact that we have derated this whole COVID situation for over a year and a half now. So that was basically the half year mark. Ever since the March of the whole shift from working from the office to working from home, and also with the shutdown globally and within our country as well. So with respect to that shutdown, obviously it will hinder the travel industry and the entertainment industry, which Airbnb is in both. At the same time, it's a tech company, which subsequently have some correlation effects into the manipulations for the sector rotations as well. So I'm gonna go through a technical analysis on where I see the stock going from here, ever since the high peak at $219 level, and ever since it sold down for about like 45 to 50% so far, trading around $135. So I find this level to be quite interesting. So I'm gonna go through a technical analysis where I see the stock going from here, what the level of resistance that we should be looking out for if you want to be buying in for the first time, and my price target for 2021 as well. So stay tuned, stick around, and let's make some money. So moving on to the technical analysis for Airbnb, ticker ABNB, you can see that ever since last year, we IPO on the December 9th, December 10th to be exact. And then subsequent to that, we have a lot of insiders sold because it just makes sense. People have been inside the Airbnb company, has been holding for quite some time now, ever since it was a startup that cultivated for the last 10 years up until becoming a public company. So a lot of people have been anticipating and holding, which subsequently drove the sell off, but immediately people bought back up because $121 at the valuations of how Airbnb could be was relatively low in valuation, right? So people immediately bought back up, and I think this was a combination of both institutional investors, but some retail investors. But I would say the mix is more like 70-30% in terms of the ratio, and then subsequently drove up. And with respect to this pump up, there was a pretty drastic pump up that subsequently drove some a collective consumer retail investor sell off. And ever since then, with more progressions, more retail investors, and more institutional exposures into the supply and demand ratios in the stock, which subsequently pumped up the stock all the way to $220 level, which was basically like a sector rotations, both on at the same time a window dressing type of thing that a lot of hedge funds have done, which drove the stock up all the way to the $220 level somewhere around like the February, which makes sense. And ever since then, because of the whole COVID situation, that doesn't seem like it's improving at all. And also at the same time, sector rotations from, more of the, growth stocks or tech stocks to more recovery stocks. And the interesting thing is that the Airbnb business as a whole, it is both in the travel industry, in the entertainment industry, in the hospitality industry, at the same time in the tech industry. So the sell-off was not as severe as like you probably saw from like Tesla or from like a Neo, which you saw that steep drop. So this is more like a sideways consolidated fashion, which makes sense, right? Because this is more of a diversified type of business, right? With both the recovery elements and also at the same time the technology elements that is in play. However, the majority of it, the thesis of this company is really in the travel industry, right? Which obviously has a huge correlations to the recovery play that we are seeing on a macro perspective, right? So ever since then, we sold off because of the exogenous factors that we just mentioned, but also with respect to the Biden administrative plan with respect to the tax yield that is going to be hindering the corporate tax level, and also with respect to capital gains tax as well. Also with respect to inflation scares and some of the tensions that we have among several different countries. And on top of that, Airbnb is not just a US company, it's a global company, right? There's a lot of travel bans, across the world, especially, with respect to like Europe. There's still a lot of that the pandemic is still quite severe in comparisons to like the US, right? Which the vaccine has actually helped alleviate a lot of that pressure in the nation. However, globally speaking, there are still a lot of needs for the vaccinations, and there are still a lot of people dying. Right, the pandemic doesn't just get fixed in the U.S. It takes time to progressively get fixed overall. Right, and I think U.S. is stepping up right now on alleviating and helping our fellow countries on getting there. So the progression is getting there, but obviously it's gonna take some time, right? And ever since that is sold off all the way down to the level of $129 at one point on May 19th, and currently we're kind of hovering and consolidating, and you see this steep drop here that we form is basically parallel to the gap that we've formed in the past. And the reason that we were consolidated sideways because we were testing this consolidated level for how long, from January 13th all the way to the February. So like basically about like close to half a month of consolidation before that pumped up and we came back down. So we were kind of testing this wall right here about 1, 2, 3, 4, 5 times. And as you could see that we were forming consistently lower low every single time. That's why I drew this green line up here, showing the downward trend and more of an escalated downtrend, right? So definitely it was indicating prominently that is a downward trend that was forming on all levels, right? And that was something that was worrisome. However, it was consolidating on this level. That's why it was like basically bouncing up and down. Also with respect to the up and down spiral movement that's been occurring is really due to the CPI report that we've been getting on mid of the month, and that's why you could see that the spikes always happens like around like the 15th of each month. Like this, you could see right here on March 15th it pumped up because of a positive CPI report or something that was more of a positive media affectation with respect to the recovery of the economy that subsequently gave some investors confidence into that. And you could see that somewhere around like a comparable time period around like the mid to somewhere around like the 15th of April as well. You saw that was some sort of a spike of anticipating that it will be a positive CPI report that subsequently, basically buy the rumor and sell the news type of dynamics, right? However, the CPI report doesn't seem to be progressing, and it was kind of like a lukewarm type of sentiment and consensus across retail investors. And also on top of that, with respect to one of the speech that Biden has given last couple weeks so far about the tax adjustments for the corporate level, and also with respect to inflation that's been prominently being being publicized on all media fronts, right? On the news, on newspaper, and also on CNBC, which is announced quite frequently, on top of the Federal Reserve speech that Jerome Powell gives us on a bi-monthly basis that gives a lot of negative pressure and negative media affectation and settlements, which subsequently drove this stock down all the way on testing this level, right? And you could see that we actually broke through 2 levels. So one was right here, somewhere around the 145, but we just crashed through straight up to test this bottom that we formed basically around like the IPO time period, all the way to the $134 level, which you can see that I drew the line here as a formation, and currently we're just basically struggling around this level, going up a little bit but bouncing down again, right? So another downwards trend. However, the downwards trend is forming an outlier with respect to this downward wedge that we have been forming, which subsequently drove this mega green candle here, because this was just logically speaking forming an outlier that was so the standard deviation was so wide that it subsequently drove more of a volume play, and that's why it gave this green candle right here. And on top of the sell-off was really due to the negative earnings that it had. Obviously in COVID, people are not traveling, people are not going to be using Airbnb, right? Which makes sense, which is why there was a negative earnings call, which subsequently drove this red candle. But the green candle was formed because people thought that was a bottom of the stock, and it was a good time to buy on a reversal, which was true, right? Because we tested this one here, tested this twice here. However, the gap right now is really relatively, wide, right? I think the next resistance level that we have would be the 129, and then also if we go down even further with respect to this one-time crash, the $121.50, that's another resistance level that we have. However, I think the likelihood of like getting down to the 120 again, I think the possibility would be highly unlikely. I give that like a 5% in terms of like the possibility ratio, and I would give the 120 or $130, which is like a flat number again, 130, which we formed somewhere around like the IPO time period when insiders sold. So currently it's highly under like at a discount right now, and I think the reversal is coming quite strong. But we're gonna basically trade on a consolidated fashion right now, knowing the fact that you could see that in the recent time, the two lines on the MACD perspective are fusing together. On the RSI, we are highly oversold, which makes sense because we are highly oversold. We're deep in the water right now. And the MACD is showing some sign of recovery right now, that we are slowly trending upward. However, we are going to be basically hovering at this level right now. And I would say that Airbnb is at the bottom. I would say 75% at the bottom right now, with 25% of possibly of going down by, again, right, like about $5 difference, right? So right now, I think is a perfect time for you to dollar cost average, to build a long-term position from here. Again, the earnings call was a very logical one. It was nothing to do with the business fundamental as a whole. It's just because of the macroeconomical situation that we have, right? But the COVID situation is going to be fixed. It's going to be corrected eventually. That we just need to be patient about this. The recovery play is going to be strong, and with respect to, on top of being recovery, this is also a technology company in the travel industry. So I do foresee us to recover in the near term, I believe in the next couple months, as we hear a bit more positive news about the vaccines efficacies and obviously the recovery going back to the normal cadence in the economy, that we should be going back up. And I think the recovery will be relatively sharp, knowing the fact that we have such a big formation of a gap here, that the first level will be going back to the $173 level, right, which is like a $50 gain right there. And then we're going to be hovering there, and then contingent on more positive news, I think sometimes in like Q4 around the Santa Claus time, we should be somewhere around like the 175 to 190 level. And when we come back officially to the economy, where people don't wear masks anymore and people go back to traveling, the airline industry is booming again, that we should be testing all-time high again, all over again, which is very logical. So I think by next year in Q1, Q2, we should be testing somewhere around like the $200 level. And I believe there's going to be some sort of like a triple whammy effect that will occur with respect to the imbalance between the supply and demand for the travel industry and the airline industry. That, because of the fact that in the last 1.5 years, people have been trapped at home globally, right? People have been working from home, and if you were to go out, you have to wear masks. So there's a lot of protections, right? And a lot of barriers, socially and, just logistically, right? So as the economy comes back up, people will start going on vacation again, and people will start traveling again. People are gonna be they're gonna want to travel more than ever, right? I think before it used to be more of like a leisure, right? But because of the fact that we've been trapped in like this social prison, if you may, or just like safety medical prison, if you may, that the demands outweighs the supply going forward, right? So it's gonna be some sort of like an imbalance that will occur, as we come back to the economy, right? So I foresee Airbnb is going to have a solid rock star level type of top line revenue generations in the coming quarters as the economy comes back up, and so is the airline industry, and so is like the resort and the casino stocks that we also see as well. that right, if you buy now, right, I think the recovery will be relatively sharp for this stock. I think it's going to be some sort of like a V-shaped recovery going forward. So if I was to buy now, I think, I would further dollar cost average and just, wait until, we hear better notifications from the government and from the officials about, the release and the, vitalization of the economy going forward. And when that happens, the profit that we will be gaining from the stock should be relatively massive. So I wouldn't be surprised from just that, and also on top of the euphoric pump that consumers typically would have, right? I think a lot of investors typically invest with emotions and invest with based on their life experience, and this is gonna be a global massive transition that the emotion is gonna run high, and when emotion runs high, it will propel the stock to go upward massively as well. All right, so just to recap on all the numbers that we just talked about right now, with respect to Airbnb, I think the current price right now at $135, $134 is a pretty good level, knowing the fact that we have formed that pretty consolidated bottom at the moment. And if we further break down, I think the next resistance level is going to be somewhere around like the 130, the 129.50 to be more exact. But I think the 130, I would feel pretty comfortable getting in, just knowing the fact that's like a psychological mental resistance level. Any flat numbers again, right? But the true number that we saw was 129.50. But if we break that, we will go down all the way to the 122, $121.50 level to be more exact. But that was really again driven by the insider selling on the IPO day, right? So that's the likelihood of this would be like 10%, 5% of possibility of us getting there. But the 129.50, that's very likely that we might get there, contingent on a negative CPI report that we'll be getting in a near, I would say, half a month from now. But if we don't, we see better recovery play. We see the sector rotations coming back earlier, that coming back up very sharply and in a V-shaped recovery, and getting more of the public consensus around like the push for going back to traveling, exploring the world, and living life again in a normal cadence is going to propel that euphoric pump across the recovery stocks and the travel industry especially. So I think right now is a fair price to get in, and in respect of these levels to look out for. My price target for year end 2021 would be somewhere around like the $200 level, contingent on obviously the economy recovery is going to be in play in the next couple of months, and as we hear more about obviously the macroeconomical shift that we're seeing with respect to the tax adjustments, the inflation scare, and more CPI reports that we'll be getting on the public consensus as a whole, that $200 level in the next 6 months or so by the Santa Claus effect wouldn't be that surprising to me. And I think that's a more of a conservative level, knowing the fact that we were at the $200, $214 level only a couple months ago, right? So going back there, having this V-shaped recovery would not be surprising to me. And if we were to get in now, 134.50, it will give you like a close to 50% gains, about 1.5 times your money. So pretty good. Okay, so that's it for today with respect to my technical analysis on Airbnb. Hopefully, you guys enjoy my insights and my research that I've done so far. Really appreciate it. Please hit the like button, the subscribe button, also that bell notification. Please look out for my next video. Thanks so much. Thanks.